Welcome to financial technology, popularly known as fintech. Again, I repeat, financial technology is the topic, abbreviated as fintech, or popularly the acronym is supposedly fintech. So, definitions of financial technology thereby. Remember, fintech is also known as financial technology and vice versa. It is an economic industry composed of companies that use technology to make financial services much more efficient than what it actually seems. Financial technology companies are generally startups trying to disintermediate incumbent financial system and challenge traditional corporations that are less reliant on software. What exactly is about it? We are talking about software, but at the same time, we are making it independent of software. We are trying to disintegrate the incumbent financial system altogether. So, yes, we are bringing in a radical change as far as financial services are concerned. We are making it available at the hand of the consumers and everyone with the object of being transparent all the time. So issues, let me give you a mind map, and this is just an issue that you need to find it out on your own. Probably I am trying to open the windows of opportunities, perhaps the thought, perhaps the food for thought for you. What are we looking into it? Look at it. Fintech is at the heart of wealth management. Robo advisor, that's automatic advisors, applications, trading, foreign exchange, investment, cash management. Then we have this bitcoins or blockchain technology, which is into cryptocurrencies. Talking about big data, we're talking about business planning, risk assessment, decision making, personalizing, reporting, aggregation, credit scoring. We talk about loyalties and campaign. What about securities? Yes, we are talking about authentication, compliance, AML, policies, privacies, KYC. KYC is know your customers. AML is automatic machine languages per se. What are we looking at? We are talking about lending, P2P, person to person, lending, direct lenders and the loaners, loan seeking people, and the lenders, the creditors that we're going to go around it. Crowdfunding. We're talking about regulation, the government arms. We talk about payment. Payment is all about cards, merchants, accounting. Payment is all about mobile, as in MNOs and devices, application, wallet, cash management. We're talking about people in terms of education, online behavior, financial cultures, consumer culture. We're talking about financial money transfers, as in remittances abroad and domestic. We're talking about cities, as in new communities, jobs, accelerators, incubators, and innovation labs. Look at the issues, the magnitude of the problems, or the magnitude of the domain that we are going to deal with it. And you can take one domain and probably you can be master in that. Will ensure the success, ultimate success. So the question is, what is fintech? As a definition, financial technology is usually applied to the segment of technology startups seen that is disrupting the sectors such as mobile payment, money transfer, loan, fundraising, and even asset management. A recent report from Accenture found that a global investment in fintech has skyrocketed from $930 million back in 2008, that is approximately 25 years back, to 15 years back, to over 12 billion by the end of 2015, and that's only taken 7 years time. Remember, Europe experienced the highest growth rate with an increase of 200 and whooping 215% from 1.48 billion in 2014. The ecosystem, if I just I'm trying to tell it to you, the example, the companies which are doing good. Some of the companies you are aware of, some of the companies you are not aware because they work in the geographical constraints. Perhaps it is not working in your country, in your continent maybe, but mostly these companies are going to overlap and probably is enter your countries sooner than later. We have something called Credible, Lendio, Ali, MoveIn. We got Asset Avenue, Orchard, OnDeck, Prosper, Lending Club, PayPal, Square, Shopkeep, Pay, Current, Samsung Pay, Adyen, Apple Pay, Zoom. You name it and we have it. It's a number of companies that are going around it. Remember, these companies are into financial technology. Some companies may survive, some companies may amalgamate, and probably they will form a bigger company on the things. What are we looking into it? Basically, the verticals of payment and transfers and lending and finances as of today. The four major areas of fintech, what are they? They are banking, they're investing, they're insurance, and they are payments. Let me give you the examples of the companies working in banking. The NAB, EaseBob, Lending Club, Fido Bank, M-Bank, Simple, Mint, and you name this thing, you will have n numbers of bank even in your country where they have the financial apps all together where you can access your account on an online fashion. Let us talk about investing. We are talking about future advisors. We are talking about Wealthfront. We talk about eTara. We have talking about Alex, Betterment, Sigfig, Tesco. What are we looking at? It is all about your investment. The advisors that comes around it. Along with it, it might be a tailor-made, custom-made investing altogether. What is it that we are talking in terms of insurances? In insurance, we have got a number of players: Peer Cover, Independent, Swift, Hema, Coverbox, Verti. This is what exactly to be taken around it. Talking about payments is Visa, payment by Visa, PayPal, M-Pass, Cardlytics, Alipay.com or Apple Pay, whatever you want to come across, you need to understand this variation. The areas and the scope of fintech. What are we looking is as far as banking and insurance are concerned, the business process is all about payment, be it wallet, digital wallet, peer-to-peer payments, investing, as in equity from crowdfunding, financing as in microloan, credit facilities, insurance as in risk management, advisory, cross policies as in big data analytics and predictive infrastructure, example security. What are we looking into it? Customer segment, retail banking, corporate banking, private banking, life insurance, non-life insurances. Interaction form, C2C, customer to customer, B2C, business to customer, and definitely B2B, business to business. So key finding in terms of payment, things have become much more easier. Things are moving from hard currency to cashless currency to digital currency. Now we are extrapolating. Key disruptive trends is all about mobile payment, streamlined payment, integrated billing, next generation security. Summary is new customer functionalities are being built on existing payment system and will result in meaningful changes in customer behavior. The emerging payment rails are key disruptive trade, as in cryptographs. Did I say digital currency? P2P, person to person transfers, mobile money as the greatest thing. The greatest potential of cryptocurrencies may be to be radically streamlining the transfer of values rather than the store of values. What about insurance? Let me give you a key finding. The disruptive trends is all about disaggregated distribution, sharing economy, self-driving cars, third-party capital. What are we looking into? Emergence of an online insurance marketplace. Homogenizations of risk will force big changes in insurer strategies. Connected insurance, key disruptive trends, smarter, cheaper sensors, wearable, Internet of Things. uh, what are we looking into? The summary is ubiquity of connected devices will enable insurance to hire and perhaps personalize insurance and proactively manage the client's requirement as on when on basis. Let me talk about the deposits and learning, the key findings. Now, let me give you the disruptive trends. It is person to person directly. You don't require intermediaries. Lean, which is automated and processed, absolutely, and alternative adjudications thereby. Summary: new lending platforms are transforming credit evaluation and loan origination, as well as opening up consumer lending to non-traditional sources of capital. What are we looking into it? We are shifting customer preferences. The disruptive trends is virtual banking 2.0, banking as a platform, API activated APIs, evolutions mobile banking. Summary: new entrants will make meeting customer demands more important, creating an imperative for banks to reconsider their roles as on when on basis. Look what has happened with crowdfunding. Not a, the key disruptive trend is empowering angel investors, alternative adjudications. Summary: crowdfunding platforms are widening access to capital raising activities, making an overall ecosystem richer. So why does fintech matter? From crowdsourcing to mobile payment, there has never been such a choice for an entrepreneur. As there are presently, it's never been cheaper to not only set up your business but also to expand it. Crowdsourcing, for example, allows people with big ideas to get funding quickly and easily from anywhere in the world, from people they have never met. Instead of months of investors' talks, entrepreneurs can, thanks to the shop window, that is the internet, pitch directly to the world. Transferring money across border is another area that has been reworked and reframed by innovators. TransferWise has turned the traditional and expensive banking solution to sending money across borders on its head and enables small firms and individuals to transfer money far cheaper than previously perhaps possible. How fintech has changed the customer. The rise of smartphone has massively changed the behavior of the consumer thanks to the always online culture we live in today and the proliferations of the services and apps that feed it. People can not only access information and data they have never previously been able to, they can do so while waiting for a bus, whether it is checking their online account or setting up an online investment portfolio. People now expect to handle financial affairs as easily and conveniently as they do their email or perhaps even their social media page. It has huge opportunities for businesses, and soon no enterprise will succeed and flourish without the right fintech services in place thereby. Presenting to you two fintech cases. Oxmoney from Düsseldorf runs one of the largest marketplace lending platform in Germany. Already has a million registered users and has granted approximately 70,000 loans. The company, founded back in 2007, relies systematically on better credit scoring by leveraging big data. However, Oxmoney still lags considerably behind the wheels of the world's largest marketplace leader, where annual originations volume exceed more than 1 billion US dollars a quarter, but is growing considerably. Let me give you another example of number 26, which is offering a first account that can be entirely managed by a smartphone. It markets its services with the assurance that you can open an account in just approximately in 8 minutes. In fact, nowadays it has been you can open an account within 3 minutes. Thanks to the real-time identification, including the ID now, the Berlin-based startup has acquired 140,000 users in Germany and Austria since it has established. The company is already expanding to other European markets such as France and Spain. I'm just giving you the home sites, home landing pages of Oxmoney and N26, thereby for you to understand what exactly is all about it. So 10 emerging trends. Allow me to elaborate upon it. They are blockchain. The number one is blockchain, and I suppose this is a wonderful thing where you can actually mint cryptocurrency. Second is gamification, nudge theory, advising, as in automatic advising, voice processing. We have biometrics, we have social integration, we have personalizations, we have big data, and last, open APIs and cloud as the case may. So there are 10 big trends: blockchain, gamification, nudge theory, robo advising, voice processing, biometric, social integration, personalization, big data, and open API and cloud. So blockchain is a distributed database that maintains and continuously grows a list of records called blocks to secure from tampering and revision. Each block contains a timestamp and a link to the previous block. A blockchain is a technology that underlines Bitcoin, conceived in 2008, first implemented in 2009, where it serves as a public ledger for all transactions. In the Bitcoin cases, every compatible client is able to connect to the network, send new transactions to it, verify transactions, and take the competition to create a new block. Gamification is an application of game design elements and game principle in a non-game context. Gamification commonly employs game design elements which are used in so many non-game contexts in an attempt to improve users engagement, organization, productivity, flow, learning, crowdsourcing, employee recruitment and evaluation, ease of use and usefulness of system. Definitely the physical exercises. Nudge theory. Nudge, as is the concept of a behavior, political theories and economists, which argues positive reinforcement. Remember, positive reinforcement in indirect suggestion to try to achieve non-forced compliances, as the case might be, can influence the motives, incentives, decisions making of group to at least an effective than the direct instruction, legislations or enforcement. This is where we are basically giving a person alternatives, options to choose from, and probably ensuring that they choose what we desire them to choose for. So that is what the necessary. The customer would have the feeling that he or she has the complete control, and that is a misplaced belief, because at the end of the day the company will likely direct the customers towards their requirement accordingly. This is what is achieved a non-forced compliance. With this, I would like to wind up as far as banking theories and financial technologies are concerned. Thank you for watching this video till the end.